Welcome back to the channel. Today we're diving into the latest U.S. manufacturing data and its potential impact on gold prices. Specifically, we'll be focusing on the September S&P Global PMI forecast. Is this a key indicator for gold investors? Let's break it down. The Purchasing Managers' Index, or PMI, is one of the most important indicators for assessing the health of the manufacturing sector. The last U.S. PMI reading for August came in at 47.9, which is below 50, signaling a contraction in manufacturing activity. For September, the forecast is 48.6. Now, this still points to a shrinking sector, but a slight improvement from last month. So, why does this matter for gold prices? Typically, when PMI readings are weak or contracting, it signals economic uncertainty. Gold, often seen as a safe haven asset, tends to rise when investors worry about economic slowdowns or future market turbulence. In times of economic uncertainty, such as a weakening manufacturing sector, investors flock to gold to hedge against risks like inflation, market volatility, or a potential recession. But here's the interesting part. While a slight uptick in the PMI to 48.6 suggests some stabilization, it's still below the critical 50 mark. And as long as PMI stays in contraction territory, gold could continue to benefit. Historically, lower PMI readings have coincided with higher gold prices, as investors pivot from equities to commodities like gold. However, gold's price movement isn't solely driven by manufacturing data. Interest rates, inflation, and the strength of the US dollar also play crucial roles. So, if you're tracking gold prices, the PMI is just one piece of the puzzle. With the Federal Reserve's interest rate decisions and ongoing inflation concerns, gold might stay in focus for investors seeking refuge from stock market uncertainty. In conclusion, while the PMI forecast suggests some improvement in the U.S. manufacturing sector, we're still looking at contraction. This means economic concerns remain, and gold could continue to be a preferred hedge for risk-averse investors. That wraps up today's analysis. If you're a gold investor or keeping an eye on the manufacturing sector, make sure to track both PMI updates and broader economic trends. What do you think? Will gold prices continue to climb as the U.S. manufacturing sector struggles? Let us know in the comments below. And don't forget to like, subscribe, and hit the bell to stay updated on all things markets and commodities. Thanks for watching.